Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, June the 9th, 2017, and this is the Daily Report for Gold and Silver. After witnessing a failure to trade above $1,300 earlier this week, I believe that would be on Tuesday, we have seen the market decline for the last 3 consecutive days. Gold trading under pressure today closed off by about $11, $10.70 to close at $1268.80. Low today, $1266, and the high on the day, $1284. Of course, up until yesterday's trading activity, we were long gold, this being the second leg of our trade, but we had moved our stop up to just below 1280 and pulled profits as the market came down. We'll look at that trade in detail when we pull up our technical studies, as well as talk about our next play and what we're looking for near term. Silver also trading under pressure today. That off about 23 cents to close at 17.18. Traded to low of 15.5 and a high today of 17.49.50. Absolutely no doubt, this week brought some interesting action to gold traders. First and foremost, we actually took out the yearly high as the market traded to a 1298 on Tuesday of this week, only to begin to trade lower. When we look at the former yearly high, that comes in roughly at 1296. Now that is the first thing that we notice. The second thing is obviously the magnitude of the sell-off and, more importantly, the inability for gold pricing to track or trade above $1,300 per ounce. So that is our current level of resistance. To our trade this week, we exited the second leg of our trade this week. This trade really began when the market had hit these bottoms back at around, 12.15. And as the market moved up, we initiated a long position roughly at 12.25. And as the market moved up, of course, we began to trail our stops up. However, we were in a June contract and we were now getting close to expiration. So what we did is, as the market came up, we sent out a notification to, in essence, roll over your position. And at that point, we got out at 1260, taking the differential between 25 and 60. And simultaneously, we entered a long position in August at 1264. As this market went higher, of course, we did trail our stops up. On Tuesday, we trailed our stops up to just below 1280. And we marked ourselves out yesterday at 1278. So we made $14 here. We made $35 here for a total of $4,900 per contract. So traders, the profits that we pulled are old news. The real question is, where do we think the market is going to track or go to from here? If you recall from yesterday's show, we talked about the fact that when we identified our fib retracement, the logical area to look at would be a 38% retracement at 1266, and that's based on a retracement of this entire rally from about 1213 up to these tops just shy of 1300. We actually hit that particular price point today, and the market moved off of that price point, but ever so slightly. So we'll have to see if next week brings some supportive action to the market, and if so, we would have a very, very short retracement, and we could conceivably go back into our bull rally mode. However, I want to see if this area holds. If it does not, the next logical point that we're going to want to look at is going to be based on moving averages, which is 1260, and that, of course, is our shorter-term 50-day moving average. And then our longer-term 200-day moving average is sitting at around 1244. Now, the reason that is interesting to me is that number also lines up with a 61.8% retracement area. You can see they cross right here. So my sense is this: we're currently going to go into the weekend flat with no active trades. We've pulled really respectable profits on our last trade. We want to see if, in fact, we can see support come into the market at a 38% retracement. Of course, we will send you out a special trade alert through email as well as your phone SMX text message to let you know when it is time to re-enter. In other markets that we do follow, we saw some strength today in the US dollar, closing up about 0.33% at 97.23. And with the FOMC meeting scheduled to get off and underway next week, we could see supportive action in the dollar. Now, mixed bag in the equities. However, we had a dramatic sell-off in the NASDAQ. Now, the industrial averages actually closed up by about 0.5%. But when we look at the Standard & Poor's index, that closed fractionally lower, but it was the composite that really came under pressure, losing almost 2% on the day, closing down 119 points. The first real severe sell-off that we have seen in the NASDAQ as this market has moved to new record high week in and week out. Dollar did close up a little bit over 0.33%, closing at 97.25. The key is we saw some dollar support come into the market as election results in the United Kingdom began to unfold, and we saw there was an upset. I am still looking at support in the dollar at about 96. And lastly, do want to take a look at the NASDAQ composite. And today we had a dynamic sell-off, really losing almost 2% in value in terms of a straight candlestick pattern. We can identify an engulfing bearish. Of course, as you know, to take that call or for it to have some real relevance, we would need to see some pretty strong selling next week with the market opening and closing below the particular price point or trading range of this week. Traders, it's all about timing and technique. As we talked about in the beginning, as well as the technical study section, by trailing our stop up, we effectively were able to pull profits even though we didn't have knowledge of the severity that this most recent sell-off would unfold to. And so by trailing stops up, by using some of the techniques that we have over the last 6 years, we've been able to consistently knock out profits for you, our subscriber. And that's exactly what we're here for. These are also tools you can take to and use with other markets. But most importantly, I'm very pleased that we got out with some very, very nice profits. This was a double leg trade as I described, and the net result was about $4,900 profit per contract over the last month or so in trading. And I'm satisfied with that without a question of a doubt. So this has been Gary Wagner, wishing you as always good trading. We certainly got that this week. We will talk to you next week for another daily update and review. Bye-bye.